I'm Puja Sharma, Assistant Editor at IBS Intelligence, and I'm here at St. Regis, Mumbai for Vision 2030, Reinventing Lending with Emacai. This is a bold step forward in the digital lending space, and from where I have seen it, it promises to reshape how banks deliver fast, flexible, and hyper-personalized lending experiences. I'm with Ramanan SV, CEO of India and South Asia at Intellect Design Arena. Welcome to Mumbai, Ramanan. How are you feeling?
Thank you, and happy to be here. Like you rightly said, we are reshaping lending with a touch of AI.
So let's start with big picture. India's lending ecosystem is fast evolving, and we have seen fintech dominate the digital lending space for a while, but now banks are clearly stepping up. What, in your view, is driving the accelerated digital push, especially in public and private banking sector?
I think that's a very important question for all of us to understand. Fintechs had a role to play and continue to have a role to play because they are bridging a gap in terms of technology, especially on the origination side. Banks had not invested in the technology, so fintechs were addressing that need. As you and I, as consumer, were used to moving into a digital space thanks to WhatsApp, Facebook, and things like that. So they occupied that space. Now banks have started to invest in technology. At Intellect Design Arena, we believe we are a tech fin, technology company enabling financial institutions. So we are providing the technology to financial institutions, be it banks, NBFCs, in the case may be, to address this need of the customer to reach them directly. So direct to customers was always there in the physical form, then moved into digital where fintech came. Now banks are getting back their own turf.
So now, since you mentioned D2C lending, it's no longer option for banks, right? Could you unpack that for us? Like, what are banks starting to understand about owning the customer journey end to end?
Sure. So, like I said, the fintech era for the last few years has been on the origination side. I wanted a personal loan, I go to a site which will initiate the loan, but the risk and underwriting will be done at the bank end. Okay. I wanted a car loan, same thing was happening. So now banks are saying, I know the customer, I know Ramanan, I know his credit history, he is my existing customer. Why do I need to source him back to my own domain through a fintech? Okay, why not offer that as a solution to the customer directly? So that is D2C, owning up the customer. The reason being is that if fintech takes me as a customer, they will provide me with an option of banks from where I can take the loan. Okay, they will choose the bank basis the commission that they will get from the bank. So offering a technology solution directly to their customers and potential customers is what is advantageous to banks. And by investing in technology at one time, it could be through CapEx or OpEx, they're getting control of the customers again.
Everyone talks about AI for credit scoring, but you're seeing it go much further. How is AI transforming not just origination, but also approvals, collections, and ongoing customer engagement?
Sure. I think before we get into the specific question of AI for lending, I just wanted to give you a perspective. We have an AI platform called Purple Fabric, and typically also customers talk about proof of concept for AI. We have gone beyond that. We've actually moved AI to production. The largest sovereign fund in the world is from Norway, and they are using our AI platform Purple Fabric for doing ESG compliance score. They could have taken the ESG score from any third-party sources, but they realized that they wanted to compute the score with the traceability and with the necessary governance model. So they've taken, after analyzing all the AI platforms available in the market, they chose us to work with us. Similarly, a wealth management firm. So a couple of use cases that I find very interesting. One of them is on the customer complaints side. Okay. In the wealth management space, if a customer complains that I was not given the right advice, the regulators don't take it lightly. The penalties could be in millions of dollars, in this case pounds. What the customer used to do is they used to take 3 to 4 weeks to respond to customer. Thanks to our AI, they are able to respond on a single day to the customer. So these are specific use cases of AI that are already moved to production. Now coming to specifics of lending, AI and lending, you rightly called out, it is on the origination space, and sometimes AI we confuse it only with retail segment. Okay, AI can also be used in other segments like SME, agri, corporate, government lending. To give you an idea of how we use AI, typically to get an SME loan, the SME has to submit a host of documents, their last 3 years P&L, the GST scores, the MOA of the organization, and things like that. And somebody would read all these documents, pick up relevant information, and take an underwriting decision. Today, we tell the SME through our banks saying that just email those documents to us. Our AI engine reads those documents, picks relevant information, pre-populates a workflow, and whatever is possible to do a validation with third-party sources, they do the validation with third-party sources and then provide it to the underwriter so that the time taken to take a decision is faster. Also, during the life cycle of the loan, the customer might want to do certain things. The bank might want to do certain things. Recently, I'm sure all of us would have read that there was a company which is in the EV manufacturing space, and after it became a default, when the bank officials went to the premises, it was an empty ground with just 4 people there. Okay, there was no factory in the first place. Okay, how can AI satellite images can be taken to reassess whether that factory is there in the first place and there is manufacturing activity, compliance through GST data that is getting flowed, that yes, they're billing customers and collecting, cash flow analysis. All these can be done to assess that there is a less likelihood of it becoming an NPA. Even the relationship managers, when they're actually in front of the customer might want to know certain few things related to the bank's policy on what documentation to be done, what compliances to be done. And it is very difficult for RMs to remember everything. So what used to happen is the RM used to visit multiple times to the same customer to complete a transaction. Now, thanks to AI, everything can be offered to the RM in the same screen so that the RM can complete the transaction. Let's assume the customer says, okay, I've understood your documentation, but how does it compare with other banks? Okay, AI will pull up that information so that the RM can confidently address the needs of the customer, so that all information the customer wants can be given in a single time, so that the back and forth can be avoided. So this can be on the origination. I told you about reading documents. It can be used on customer service and risk management during the life cycle, and any customer queries answering. So host of activity can be done using AI in the lending space.
Now, the idea of DIY lending is very fascinating. Are we really at a point where bank can roll out personalized loan products, say a festival or a student loan in under an hour? And how does this shift impact operational models?
Okay. So let's look at it this way. Okay, in retail segment especially, that you and I as retailers, we are in a shop, we bought a refrigerator. At the point of purchase, we offer you a loan. Okay, how is it possible that they take a decision in a fraction of a few seconds or a few minutes to take a decision, thanks to the digital infrastructure that has been created? Your CIBIL scores are available, account aggregators can pull data of your assets and liability, and then enable AI engine to recommend whether to give a loan to Ramanan or not. Okay, but assume that similar DIY is being offered to an SME. Okay, an SME has taken a working capital loan. The next, he wants to take an equipment loan. Today, the processes are, we go back and collect the same set of documents, your last 3 financial statements, your GST scores, and whatever the documentation that are required. Today, when as a retail customer, when I log into my savings account, because they know my pattern, when do my salary gets credited, what kind of spend that I do, okay, they are offering me solutions. You want a housing loan, you want a car loan kind of thing, because they have studied my profile. Similarly, if you have studied the profile of the SME, you know what is their income statement, what kind of customers and what timelines are they paying. Can decision be taken in such a fashion that it can do it yourself can be offered. So these are various things that we are thinking of. It can be extended to farmer loan, it can be extended to government loans as well.
So, what are the implications of AI and challenges in financial services space?
Yeah. So the basic and the first input that I want all of us to understand is putting your data out in public domain, you are exposing yourself. And this is where the regulators like RBI come into play, and they want the data to reside in the premises of the bank. So what entities like us at Intellect we are offering is our Purple Fabric, our AI platform, can be deployed in the bank's own data center. Similarly, when all of us assume that LLMs available in the open market, I connect to an LLM, it will give me an insight. But what we forget is LLMs are used on data that is available out in the World Wide Web. Each bank has their own proprietary data. Could be business rules, could be some insights that they have built over a period of time. You've collected some customer data which is sitting in your relational database. Some documents are sitting in your document management system. How do I get all those information available to take appropriate decision? So what we at Intellect recommend is that first the bank has to create their own enterprise knowledge garden, nothing but their own data. And on top of that, you can superimpose an LLM so that decision can be taken through digital experts. So this is the way forward. Otherwise, AI will still remain in POC state. It won't be business impact AI. So if you want real business impact to take place, first have to create your own enterprise knowledge garden, and then on top of that, run digital experts.
Now, let's talk about Intellect's Emacai lending platform. In a landscape where speed and scale are everything, what makes your platform stand out?
Sure.
And from zero touch documentation to 1200 plus APIs.
Sure. Okay, so we've been speaking about the ecosystem play, right? I mean, no more are you taking decision on a standalone basis. You're connecting to the ecosystem. Could be account aggregators, could be CIBIL, various other sources of third-party data that is available to take an underwriting decision. Also, life has changed, right? I mean, the kind of transaction volume, I mean, come Diwali, suddenly the loan spikes can happen. Any festival season, why limit to one of them? It could be any festive season. There could be a Black Friday sale. Those are days when volume of transaction changes. So we believe that today the banks need the fifth generation of banking technology. We call it Bank Tech Wave 5, which basically means Emac.ai, which is events-driven, microservices-based, API, cloud-native, headless with a touch of AI. If I were to give you an analogy what this is, okay, as kids, we've all watched movies in Doordarshan where they will announce Sunday evening 5 p.m. is the time this movie is going to start. If you want to watch the movie, be in front of the television at 5 p.m. That was branch banking. Monday to Friday 9 to 2, Saturday 9 to 12. If you want any banking transaction, come there. And now the Netflix movement. I choose to watch a movie when I want to, during the day, during the night, 24/7. Banking has moved to the Netflix movement. You do transaction whenever you want. So Emac.ai is microservices, the technology that powers Netflix and powers banks today. API is the communication channel. Cloud is a euphemism for an infrastructure layer where you will host these applications. Head is the experience layer that the bank wants to differentiate between one bank to other. Everything with AI. That is what we are offering the banks, not just in India, but in over 50 countries where we are present, to choose lending using Emac.ai.
Now, Ramanan, last but not the least, if you had to name one big shift in banks must make now to remain relevant in lending in 2020, 2030, what would it be?
So, I think we covered this, but at the cost of repeating myself. One is the technology, which is your Emac.ai, which is your microservices-based API, because the speed, I mean, if I were to use another analogy, I mean, as growing up, when I used to book railway tickets in IRCTC site, it used to buffer because it had reached a capacity. And then today, technologies, nobody has the patience to wait. Okay, so you have to have the right technology in spite of whatever the volumes to handle. So Emac.ai and AI capability, okay, which is what we spoke about. You're using your own enterprise knowledge garden, your own data, which is vectorized so that the AI LLMs can work on top of it. A combination of both is important to stay relevant. If banks don't invest in this, there is somebody else, another set of fintechs who will come and take over.
Thank you, Ramanan, for having this interaction with us, and all the best.